Hi, this is Karen from Soterian. You're listening to the SAP Security and GRC podcast, helping you on your journey to effective access risk management in SAP. In today's episode, we welcome special guests from BDO. Our topic for today is unlocking compliance with UK corporate reforms by quantifying financial exposure of segregation of duty risks. The content of this publication are for reference purposes only and may not be current as at the date of accessing this publication. They do not constitute professional advice and should not be relied upon as such. Specific professional advice about your specific circumstances should always be sought separately before taking any action based on this publication. BDO LLP shall not be liable for any reliance placed on the contents of this publication. Thank you for joining us.
Hi, everyone. Thank you very much for joining our podcast today. Today, we are joined by our guests, Jeroen, Basten, and Aditya Chordia from BDO. So before we jump into the topic, I'm going to give our guests an opportunity to introduce themselves, and we'll start with you, Jeroen.
Hi, everyone. My name is Jeroen Basten. I'm a partner in BDO Digital, where I help my clients with automating and strengthening their control environment with the use of technology, of course. So this is the way that they can stay compliant, gain trust in their data, systems and processing, whilst also reducing the cost of control.
Cool. Thanks, Jeroen. And Addy?
Thank you, Emile. So, Senior Manager at BDO, work closely with Jeroen, CISA, CISSP, and SAP certified professional with sort of a decade of experience in technology risk and digital transformation advisory, specializing in SAP, ECC, and S4 controls design and implementation. Also have experience in leading controls workstream as part of sort of large S4HANA ECC implementations to ensure business process controls automation, business aligned segregation of duties, rule set designed. Also have experience in recommending GRC solution best practices, including access management and continuous controls monitoring to optimize the efficient operation of ECC and S4HANA controls.
Great. It's great that we have experts today because our topic today, it sounds like a very complicated one. So our topic for today is unlocking compliance with UK corporate reforms by quantifying financial exposure of segregation of duty risks. So that is a mouthful. So if I can maybe pose the first question of the day to you, Jeroen, if you can explain to the audience, so what exactly is the segregation of duty risk and why is it important for companies to quantify and monitor segregation of duties?
Yeah, of course. Well, let's take a moment to ensure that we're all on the same page regarding the concept of segregation of duties risk. Now, essentially, it arises when a user in an application, or maybe even across multiple applications, is granted access to perform basically business activities that conflict with each other. Because this carries a risk to the company. It could be a financial risk, a fraud risk, or an operational risk. Now, as an example, right, imagine an employee who's got access to create new vendors, new suppliers, and setting them up in the system, but is also able to submit invoices that become payable to that vendor as part of, your typical accounts payable process. That's like a classic, fraud risk, because an individual could use that access to basically divert funds from the company to themselves for personal gain. So specifically, that would involve that user setting up a new vendor in the system, configuring that vendor's bank details with his own personal bank details, and then subsequently, after the vendor is set up, the employee can raise an invoice to that vendor, and then when the payment date is due, that invoice will be automatically picked up in a payment run and become payable to that individual itself. So that way, that sort of combination of access that's available to the person, and if internal controls are lacking, can be abused to pay yourself from the company accounts, which is something that we of course want to prevent. Something that, if people do have that access, you want to have controls in place or be able to quantify, if people have actually abused that.
Right. You actually explained it very well there, but Adi, maybe you can just add on there and maybe give us some real life examples as well of, where access has been abused for fraudulent purposes.
Thanks, Emile. There have been multiple real-world occurrences where this type of fraud risk has materialized in businesses, leading to substantial financial losses. For instance, back in 2009-2010, in Koss Corporation, back in the US, the VP of Finance created fictitious invoices for purchasing of audio products and set up a fake supplier with her name itself to funnel $34 million from the company into her personal account. Another example is North Carolina State Health Plan fraud, where two employees set up a sham company called Physiotherapy Compliance Solution and fraudulently billed the state health organization $400,000 for the services which never were rendered. One more example with Guam Solid Waste Authority regarding 2016-2018, an accountant created a failed company, Slidell Associates, and generated over $6,000 in fraudulent payments to, again, his own personal account. And all of this has been due to because they had access to process invoices and create suppliers.
Yeah, it's actually very scary if you think about it. That there are so many, and that's just the ones that's basically been public. But there are so many examples of fraudulent activities happening, because you often go to customers and they say, "Well, we trust our users, or that will never happen to us." So, Jeroen, maybe you can answer for us. So to protect yourself against it. So, what are the kind of the controls that the company can put in place to protect them against this potential fraud?
Yeah, of course. But look, obviously, one of the key things and the best way is sometimes prevent users from getting this access, right? So having effective user access management controls in place to prevent people having conflicting activities. And of course, we've been working here with a single example, right? Changing vendor master data versus posting invoices, but there are hundreds of combinations of access that carry, fraud risk, compliance risk, and sort of potential financial misstatement risk with it. So it's not sort of that single, example. It goes far beyond that. And SAP user access and, generally access in complicated ERP systems is very complex, right? So organizations typically struggle to do that without the use of a separate specialized tool, such as Ceterion, which will have a built-in rule book, a rule set that allows it to identify and classify access risk into, different risk categories from critical to low risks. And a tool like that enables a company to get a transparent view of the segregation of duties risks in their system, which then allows them to, prevent the introduction of new risks, but they can also use it to drive improvements, right? By either removing access from people or by implementing, mitigating controls in the business to address the risk. However, no organization has an access model that's free from segregation of duties risks. So when such conflicts arise, the crucial question still remains around quantifying the financial exposure. In short, have people with that conflicting access abused our access rights? And if so, what's the impact? So attempting to assess this risk involves a really complicated process, right? You need to review, in our example we used earlier, all the invoices posted by a user and combine that with information about the vendor records that, he or she has changed over time. Now, that sounds like a straightforward thing, but it really isn't. If you think of, how complicated the system is, right? How many tables you have in the database, how the system information processing works. So you really need extensive knowledge of, the data model, the system processing, and sort of how to move forward with that. And that is not an easy task.
Yes, as you point out, it becomes super complicated, and there are so many different examples. So we've talked about banking details, but there are so many different fields that can be sensitive on like a vendor master record, and that's just one of the things within an ERP system, and that can be manipulated for fraudulent purposes. So maybe you can also highlight to us a couple of additional considerations then for implementing controls.
Yeah, of course. If we continue on an example, right, we could start by getting the information on all the vendor invoice data that individual has changed and categorizing them in specific scenarios. Now, for example, we can say that, hey, we're only interested in invoices above a certain amount, and maybe therefore getting rid of, a large volume of invoices that are either below a threshold that we don't care about or are a lower level of risk. Other categories are maybe a large number of invoices are reliant on having an existing purchase order in place that's been goods receipted again. So the classic sort of automated control around three-way matching. So invoices that are connected to a purchase order potentially, again, are no risk and therefore don't need further investigation. So by sort of trying to bucket our data, we are basically working towards a smaller and smaller data set of a list of invoices that we really do care about, and we're basically trying to de-risk the other ones. So by doing this, we end up with a small number of scenarios that require further investigation, and that then takes us to meaningful results from a giant stack of information.
Yeah. So maybe the next one, Adi, I'll pose to you. So, even after applying all of those additional criteria, you would still end up with a lot of violations. So maybe you can explain to us the process of the quantification of the access risk and how we would kind of go about that to build an effective control.
Sure. So as you mentioned earlier, there are various SOD examples beyond the specific one which we just discussed, right? And when you start consolidating all of these information which we get out from the system's data models, it provides valuable insight. I've got with me here some of the potential examples of access conflicts, indicating users who can perform conflicting functions such as create or maintain suppliers and process supplier invoices, create or maintain suppliers and process payments, process invoices and process payments, process purchase order and process invoices, and process purchase order and process payments. These are the typical sort of 5 to 6 segregation of duty risks, which in the purchasing process are sort of very critical. Now, the data we can get from the access model is, let's say there are a number of access conflicts, which we call as can do, is 208 users against create or maintain suppliers and process invoice, 221 users against process purchase orders and process invoices. However, when we go a little bit more deeper into the data model and start building more meaningful information, we would be able to see that although there is can do users is 208 against the create and maintain supplier and process invoices, only 4 users have posted conflicted transactions. Obviously, as a next step, we would need to investigate these 4 transactions to check whether they were appropriate or whether there was any real fraud transaction ever occurred. But actually, in the real world, the lowest number of access conflicts results into the highest exponential significant impact. As an example, which I've got here with me, is process invoices versus process payments. Only 37 users from a can-do perspective have got access. However, they have posted 3,469, the highest conflicting transactions, whose total financial value is £11,509. This highlights that access analysis alone in itself, the can-do access analysis, can sometimes be misleading in identifying the most significant impact to the business. Additionally, a particular user will occur in our exception-based reporting when we go deeper and may not occur in the access conflict analysis because access status change over time. Therefore, exception-based reporting can capture real-world examples which is actually impacting your business, which have been also been missed in your can-do access conflict reporting. So that's how generally organizations do the joining and sort of stitching of the data model to get to the meaningful results.
Okay, that's great. So if I can maybe summarize what we've discussed here today, basically you want to put in place effective control. So maybe starting with something on access control to limit the number of users that, first of all, can do certain conflicting functions. And then once you've restricted the number of users that can actually do it, then putting in place those additional controls that will highlight, the business risk or the financial exposure where people are potentially using those conflicting actions, and to highlight to us where users have actually potentially misused it. And with these additional tips from you guys, we can use that then to identify what are the more important areas for us to focus on. So, so I think if anyone wants to reach out to us, about these topics and see how Saterian or BDO can assist you with these specific topics, feel free to reach out to us. And yes, thank you to our guests for joining us today. And we hope to see you in the next one.